Hey folks, good evening all. Today in this new video, we'll talk about the benefits of options trading and why in many cases, options trading gives us an edge over cash trading. So first, let us go through the benefits and then we'll go through a couple of examples to explain what I'm talking about. So, so the first point that I want to convey is if you want monthly income, a regular monthly income through trading, uh, I would say it's possible through options trading. It is sometimes also possible through cash trading. But in cash trading, you need the market to be also in your favor. Like if the market is trending upwards, then you can make money by buying and selling stocks using cash. Uh, I mean, that way you can generate income, through trading. But what happens if the market is in a downtrend or the market is sideways, like it's not doing anything currently? It's like moving in a range. Nifty is like moving from, say, 18,200 to 18,400. That is the range of the Nifty right now, right? So, in this case, how are you going to generate uh, a monthly income through from your trading in cash? It's very difficult. Like there are very, you might be very good at picking your stocks and managing your trades, but then in most cases people will find it difficult to make money through your based on the cash trades that he or she has been doing. But in this case, the options trading gives you an edge because it can help you generate income irrespective of the condition of the market. So if you understand the market condition, like if you know that currently the market is sideways, then you would have option strategies in place which will give you money in a sideways market, right? And similarly, if the market is trending downwards, you would have option strategies in place which would help you uh, get money or make money from the market downtrend, which is not possible through your cash portfolio, stock portfolio that you are having, right? I mean, some stocks might be doing good, some stocks might not be doing so good, and overall you might not be making money in a downtrend or even in a sideways market. And also for working professionals, it's more time consuming to research stocks to invest in, right? So out of the 2,000 odd stocks that are currently, tradable, uh, you have to have a screening process in place. Then you have to, figure out when to enter, when to exit, how to manage the trade. Yeah. So you need to have a process in place to regularly make money from your cash positions. But with options, again, you need a process for sure, but you can concentrate on the Nifty and maybe just about 5 to 10 stocks, right? You just have to study those 5 to 10 stocks where the options, uh, where the where there is liquidity in the option strikes, like Reliance. Most of the big stocks are very liquid in the options. So you can filter out 5 to 10 stocks and make regular money based on the view that you have on those stocks. So we'll go through an example and then you'll understand this better. Also in cash buying, uh, you can see cash buying, you can make money only when the price of the stock goes above your buy level, right? But what can happen that's 1/3 chance, right? Because the price of the stock can go up or it can remain flat or it can even go down, right? In that case, you'll be losing money from your investment, right? But in options, based on your view, you can make a trade. You can take a trade which supports your view, and then even if your trade goes wrong, if your view goes wrong, then you can make adjustments to that particular option trade. And in some cases, you might also end up making money out of the trade, even if your view is wrong. So, and also option strategies, you can hedge your trade. While in cash buying, you get thrown out, right? So suppose if you take this, so take this example of IndusInd Bank. So IndusInd Bank at 1240, right? This is a breakout level for IndusInd Bank. So how many times it has come to this level and fallen back? So this is the first time. So again, so people who are, breakout traders, right? This is the first time they'll be thrown out of their trade. This is the second time they'll again be thrown out of their trade because the breakout, it didn't happen. And this is the third time that IndusInd Bank has again come up to that breakout level. Whether it will, actually, break out this time or not, we don't know. Only time will tell. But using an option strategy, you can still make money out of this trade or lose very little money in this case. I'll show you how to do that. Just hold on for now. And also, there's a myth that option trading is much riskier than stock trading. Yes, if you buy naked options or sell naked options, it's highly risky. And of course, I mean, there are a lot of people who do that. Actually, they are very good at, scalping. Like they buy in huge quantities and stay in the trade for, say, 10 to 15 minutes and make money and get out very fast. But for that, you need to be in front of your monitor for the entire period of the market, and you have to wait for your opportunity as to when to enter into a trade, make the money and get out, right? So I've seen people wait from 9:30 in the morning to at least to about 3 p.m. And then finally get an opportunity at say around 5 p.m. or 3:10 p.m. and enter, finally get a trade and then make money. But if you're working, you don't have that time, and you don't have that opportunity also to stay in front of your screen. So yeah, so in that case, it's better for you to make positional. If you are doing options, it's better for you to do positional option strategies, which will help you to stay in the trade for a long period of time and with risk protected. I mean, with limited risk. Like, that whatever happens, this is the maximum that I'm going to lose in this trade. Not possible even in cash, because in some cases, you might have a stop loss in place, but that stop loss might not get triggered because overnight there has been a big gap down, right? Overnight, say, suppose in Infosys, a few days back I mean, when they came out with results, see, even in a big stock like Infosys, it fell 10% overnight because of bad results, right? So, even if you had a stop loss in place, your stop loss wouldn't have got triggered, right? Because I mean, it would have got. I mean, so suppose you had a stop loss in place which was 2% below the price, but Infosys fell 10%, so your stop loss would have hit. So instead of 2%, you losing 2% on the trade, you would be losing 10% on the trade, right? So that's the point I'm trying to make. So yeah, coming back to this IndusInd Bank chart. So what can we do now? I mean, if we do a cash trade, we can again enter in cash, and then hope that the market IndusInd Bank this time takes the actually enters. I mean, gives the breakout, and you make profits from your cash position, and keeping a stop loss. Of course, all trades should be there with a stop loss, so that you don't lose much. Your losses, your capital is protected to some extent that way. Otherwise, you can employ option strategies. So this is a tool that I use for for payoff diagrams and all that. So IndusInd Bank. So what I am doing here is, say suppose it's IndusInd Bank currently is at 1260. So I am buying the suppose. So I am also expecting a a breakout, but instead of going through cash, I am buying a call of the 260 strike price to take a position. So what if I do that? And sorry, yeah, I think I already had a position anyway. So yeah, so I bought one lot of this 1260 call. It's priced at 38.8, almost 39 rupees, and the lot size is 450 for IndusInd Bank. So the maximum that I can lose in this trade is 17,460. If the trade goes in my favor, I make a lot of money based on how much IndusInd Bank moves during the month. But what if the trade goes wrong? What if again IndusInd Bank, fails to give the breakout and starts going below, say 1260? So then in that case, suppose this is the trade that I had today, right? Based on the assumption that tomorrow IndusInd Bank will go up, will give the breakout and go up. So what? And if tomorrow morning I see, say after 1 hour or so, the stock not moving as per my as per my view, it's actually going below 1250, maybe even 1240. So what will I do? So in that case, what will I do is I'll sell options. I'll sell maybe we have bought 1260. So what I'll do is I'll sell 1280 options. And I'll sell 2 lots. Why I'll sell 2 lots? Because right, I don't see at this point IndusInd Bank going above 1260. I'm thinking this is again a failed breakout, and if it's a failed breakout, I'm thinking like I know it will again take a while time for IndusInd Bank to come back to 1260 levels and cross it. So if I actually do this, then you see I actually make money. I've adjusted my trade to make money when my view has gone wrong. So my break even now is 1322. So for me to start losing money, IndusInd Bank will have to go above 1322 now. And what is the money that I'm making? I'm making around 10,000 rupees from my current position. So that is the options trading gives, or flexibility that the options trading gives, right? If I had entered a cash position, tomorrow my stop loss would have been hit and I would have been out of my trade. What would have happened? This is the 4th time I will be out of my trade, and more frustration, more loss of emotional quotient, right? This is normal psychology, right? The more and more I fail, it depletes my emotional quotient, right? It adds to frustration. So yeah, so this is one example I wanted to talk to you about. The other example is, you can make money from options, using options, generate actually regular monthly income. This is what I have done in ITC for the last 2 to 3 years. Okay, so today also, today also I sold this call option at ITC, the 460 call option. I hold ITC in my portfolio, just as a disclaimer. And yeah, I sold it at an average price of 4.3. And so let's see what is the payoff going to be like? Say, today the price closed at 441. Today was the expiry of May, and from tomorrow the new June month starts. The expiry for June starts. So, so based on my current price 441, how is this trade going to make me money? So at these levels, so say these are the prices at which ITC say expires by the month of June. Suppose it expires at 440. So my loss from my current holding would be 1 rupee because it's at 441 right now. And the profits from my option trade, because I sold 460 call at 4.3, I would be, keeping the entire amount of this premium with me. So I would not have to give back anything. So I would be making 3.3 multiplied by the quantity that I have in my holding, which is 3,200. So this is the amount that I'll make if ITC stays at this position, I mean, at 440 by the end of the month. And these are the amounts I'll make when ITC, is going up. See, until 460, this is the place where I'll be making the maximum money. And after 460, what will happen is the call will start giving me a loss, but that loss gets covered with because of my because I have ITC in my current holding. So this will give me the coverage of the loss of the options. So this strategy is called covered calls, and I have been using this strategy for the last many years to generate money, to generate monthly income from my equity portfolio. So this is what I wanted to tell you about. And so finally, this is the big announcement that I really want to make, why I've been saying all this. So we are starting our first batch of options trading program on the 10th and 11th of June weekend. So visit our website, goforstocks.com, and the trading zone to get more details of it. It's a 3-month program where the first month will be spent in understanding the concepts and strategies, and the next 2 months will be more of hand holding of trades and doubt clearing sessions, and then all the live webinars will be conducted during weekends. So this is keeping in mind that there'll be working professionals who are attending it. So we do this during the weekends only. And this is who we are. So you visit our website, goforstocks.com, for more details. And this is the disclaimer. So investments in securities markets are subject to market risks. So read related documents carefully. Securities quoted are for, this is very important, are for illustration only and not recommendatory. And registration granted by SEBI does not mean that, does not provide any assurance of return to investors. With this, I'll end my session today. Thank you for listening and have a great evening. Bye.